I'm joined now by the Head of Strategy and Vice President at ArcelorMittal, the Global Head of Strategy, that is, Brian Aranha. As you know, ArcelorMittal is in the headlines these days in India for charting a new India strategy through the acquisition of Essar Steel. It is one of two bidders for that asset, which is currently going through the insolvency process at the NCLT. And Brian is here to talk to us about ArcelorMittal's India strategy, especially emanating from that acquisition. Brian, thank you very much for speaking to Bloomberg Queen. Before I get on to the Essar Steel acquisition and what that means for your India plans, I have to address questions around the failed investment in Uttam Galva and why that didn't go to plan. So I'm going to leave you to answer that question first. What went wrong with the Uttam Galva proposition in 2009 when you decided to enter India through that venture and an investment in that venture? You all sounded very gung-ho.
Yeah, I think with Uttam Galva, I think the story is known. We had a shareholding in that company, but never really participated in the management or the operations of Uttam Galva. Ultimately, the company was run by the Miglani family entirely, and we were more or less a financial investor. So the details of what happened, I think the company got over-leveraged, and the rest is history. But for the details of how it came about, we don't know, because we were not really involved in the management of the company itself.
Wouldn't you say, Brian, that's a little surprising, given that, in your acquisition or investment in Uttam Galva, you ended up with a 29% stake, which by no accounts is meager. And you also had a promotership agreement that you had signed with the promoters, that's the Miglani family at Uttam Galva. So how is it that, you had no role to play or no understanding of why the company's fortunes declined so rapidly?
Well, there were several other priorities in the company at the time that this acquisition was made, so I think our focus was elsewhere. And meanwhile, we did not appoint any board members or people to the management of this company, and it was left to the family to manage. And it's probably better to talk to them about all those details, because they're more familiar with those.
But that doesn't speak very well for your ambitions in India. If you invested up to 29% in a company, spent over, reported $500 million to do that, had this ambitious plan to build out a plant in Orissa, which unfortunately didn't go through in terms of government approvals, and claimed that you had no role to play in management. Now, I'm not suggesting that I'm countering that or competing with that argument. All I'm asking is, what does that say about your commitment to India?
Well, our commitment to India is very strong. As you know, there was a downturn in the economy in 2008, and prior to that, we had plans to build a greenfield facility. And since then, we have had an experience with Uttam Galva, which we'll set aside for now. But then we have also attempted through other means to enter India, and now this opportunity has come up. So we look at this very favorably for a few reasons, because I think our compatibility with this particular business is very strong. As we have said repeatedly, we have a clean slate when it comes to our financial management. Our debt is very well managed as a corporation, as ArcelorMittal, as a global company. And then our other credentials for this particular bid, we've talked about in several other interviews. We have the operating experience. We're making, millions of tons of steel all around the world. 85 to 95 million tons, depending on when you want to talk about it. But we're doing this. We've done turnarounds in different parts of the globe. We've done them in Eastern Europe, in Ukraine, in Romania, in Poland, in Kazakhstan. So we have a lot of experience in how to do this that we've accumulated. So that gives us, the compatibility with this particular business that we're trying to take over. Secondly, it's not just the general experience of taking something over and turning it around. With respect to these operations, we have very specific know-how in all the types of operations that they run, some of which are unique. They have a thin slab casting and a continuous hot strip mill behind that. We have those operating in our company. They have this process called the Corex and the Conarc. We have those operating in our company. And of course, then, there are sinter plants and blast furnaces, which are much more common around the globe, and those are operating throughout our company as well. So we have long and deep experience in how to run this kind of a business. And we have a management team that is very deep and can be brought to bear.
I'm not disputing the fact that you are the world's largest steel company, and therefore you have experience equivalent to 90 million tons, as you pointed out, which is what your annual production is. I'm just simply asking that if that experience did not succeed in turning around as serious an investment as 30% in Uttam Galva, then why would it, sort of make us feel that you're serious about Essar Steel in any fashion? After all, you did spend $500 million in 2009, right after the global financial crisis hit the world, in being able to acquire that. And from everything you said at that point in time, Uttam Galva was to become the vehicle for your ambition in India. I don't want to dwell too much on the past. I'm just trying to use that to understand why, if you didn't succeed in turning that around, you would have a better record in turning Essar Steel around.
Well, with Essar Steel, we're looking, I think the merits of why we should be the winner for the Essar Steel bid is the seriousness of our commitment to Essar Steel is in our bid package. And the resolution professionals and the committee of creditors will be able to view that and understand the depth of commitment that we're making financially and otherwise. So I think I will leave it to them to make that judgment. With respect to Uttam Galva, which we keep returning to, unfortunately, it's a distraction for us at this point in time. It's something in our history that could have been managed better, obviously. Nobody likes to see this outcome. But at this point in time, we are focused on the Essar investment and bring all our credentials to bear there, and would like to put those up against any other competitor to see who is the better suitor for this acquisition.
Fair enough. I have one last question on Uttam Galva, and then we'll talk entirely about Essar Steel, and that is, I think you invested about $500 million to acquire the 29% stake. The last I heard, you exited at ₹1 per share. Can you give me an idea of how much money you lost in that Uttam Galva investment?
Well, I would rather not talk about those details. I think we're focused on moving forward rather than looking backward. And our forward-looking view is towards how to take over and make this Essar asset operate to its full potential, given that we are the partner with the best credentials to make that happen. So hopefully we can focus on looking forward now rather than looking back.
All right, then tell me why you bid for Essar Steel, given that there were 5 different types of steel assets on the block here in India, from Electro Steels to the 2 Bhushan companies to Monet. Is size the only reason? Because all of them are substantially smaller than Essar Steel, and the potential for expansion that Essar Steel holds.
Yes, probably given our ambitions as a steel company in total, wanting a substantial share of whatever market we're in, I think the Essar assets fit better with our strategy overall to be a player in the Indian market that is growing very rapidly. GDP growth rates of 6 or 7% will support strong steel consumption growth in India. So we want an asset that can grow with the economy, and probably the Essar asset was most compatible with that vision and ambition that we have.
Okay, there are a couple of drawbacks to this potential acquisition, and I'd like your views to that. For instance, the fact that Essar is gas-based. And I know when I last spoke to a key steel player in India, JSW Steel, they said they weren't going to be interested in bidding for Essar because they thought that a gas-based plant is unviable technology. What's your view on how you're going to be able to make this viable?
Yeah, so we understand the operations of the plant today and its technology very well. And the details of how we would operate are in the resolution plan that we've submitted. And unfortunately, I'm not in a position to discuss those details. There are some confidentiality clauses that are in the process that we're participating in. And hopefully you would allow us to respect those confidentiality clauses in this conversation that we have.
Okay, fair enough. But can I assume that you would work towards, in some ways, changing that gas-basedness of the plant or eliminating its dependence on gas? Would that be a key thrust area? I would imagine that's the logical answer, but I still need to confirm with you.
Yeah, so that's, like I said, that's part of the detail in the plan, and unfortunately we're not at liberty to discuss it or disclose it to a competitor who might be listening to this conversation as well.
Oh, come on. Now, I'm sure the competitor has also been through this, whoever the competitors are. The other controversy, since you won't answer this one, has to do with the Orissa-based pellet plant and the slurry pipeline, which could likely end up in the hands of your competing bidder, which is New Metal, though that case is currently stayed in the courts in India. You know, if that supply is anyways jeopardized, let me put it this way, how much of a hit on operations at Essar Steel would it be for you if you were to turn out to be the winning bidder?
Well, I think we'll let the courts decide what is going to be decided regarding those assets. But clearly, those assets are important to this facility, and we would deal with any issues that come up as they do come up in the future. So right now, I'd rather not speculate on what the future may be with respect to those things.
But Brian, is it a deal breaker? If you did lose in court when it comes to the Orissa pellet business and the slurry pipeline, would that, you know, change your view substantially of how viable Essar Steel is? Would that change, of course, your financial valuation of the business?
Well, I wouldn't really. I'd rather not speculate on that at this point in time, because there is something to be decided there. And whichever way that goes, you know, we'll be prepared to deal with it when it does happen. You
will be contesting New Metal's efforts to acquire that business?
I'd rather not speak about, you know, speculation on the future, because there is no decision yet on that. So we'd rather wait for those issues to be decided before disclosing or determining what we do.
Okay, the third sticky issue with regards to the Essar Steel plant is the availability of the usage of the Essar port services that are adjacent to the steel plant in Hazira. I want to know what your view there is, because that asset is not part of what is being hawked under the insolvency process. But it's critical to being able to bring supplies to the plant. So how are you going to work around that?
So, you know, in our due diligence process, we've understood these types of issues. And our resolution plan covers what we would do. So again, that's a detail that's in the plan, but surely we've understood the issue just the way you have and taken it into account during our due diligence process.
So there are some reports that the port, you know, has to supply to the plant. That's part of the approvals given. Equally, there are some reports that the long-term arrangements between the Orissa slurry, pellet and slurry operations and Essar Steel are contractually bound. How much of a deal breaker could any of these two issues be? That's what I'm trying to gauge. I understand that you're restricted by confidentiality clauses, but if you can give me a big picture, it would help us appreciate and understand how this asset evolves from here on.
Yeah, please, you have to appreciate that for me to discuss with you what is a deal breaker and what is not is very much part of the resolution plan that we've submitted that is covered by the confidentiality that I just spoke about. So really, I can't get into more details about that, and I hope you understand that.
Okay, fair enough. You, of course, already know that you've run into this war of words, if I may call it so, with the other bidder for Essar Steel, that's New Metal, and the both of you seem to be disputing each other's eligibility. I'm not going to get into that, but I do suspect that this will end up in courts. There may be protracted litigation, and are you ready for that? Are you going to chase this asset all the way to the end?
Well, we are very committed to acquiring this asset. So that's one statement I think that we can make. And with respect to the eligibility, we have the resolution professionals who will determine that. There's a committee of creditors, and then there are the courts. You know, there are several levels of discussion that can take place. So we will hopefully be, our view is that we are eligible now. So we are not looking forward to any court battles, because our eligibility at this point in time, from our standpoint, is clear. We think that the Section 29A is intended to keep out willful defaulters, which ArcelorMittal certainly is not. The spirit of that law is pretty clear. So whether there will be a court battle or not is another matter of speculation. But at this point in time, I think our focus is on our eligibility, which we think is clear, acquiring the asset and then moving it forward to achieve its full potential in the Indian economy.
All right, I'm not sitting here to judge whether you are eligible or New Metal is eligible. I'm just simply asking that the chances right now are fairly high that this will end up in court, and therefore how prepared you are for that battle. But I think I've got your answer there. The question with regards to the financial bid, now there are some rumored numbers out there. It is expected to be that the plant or the business of Essar Steel is valued at about $6 billion. What can you share with us? Again, I suspect your answer is going to be that's confidential, but nonetheless, I should put the question to you.
Yeah, probably that's the most confidential of all things in the bid.
All right, but $6 billion valuation, a ballpark is correct for the business?
Well, I think each bidder has probably done their own valuation and understands what they can do with the asset and made their bid accordingly. So that's all I can say at this point.
Okay. If you do bag the Essar business, how will your India plans play out from there on?
Well, I think Essar will be, a centerpiece in the India plan, given the scale of the asset and the potential that it has to grow. So, who knows what the future will bring? ArcelorMittal has in its DNA to grow its business around the globe. But for now, we are focused on the Essar asset, and it will be the main point of focus for us for the foreseeable future.
You expect to be able to take the brownfield expansion at the plant or the total capacity to the plant in a couple of years at minimal investment to about 10-12 million tons?
Well, again, the exact figures are in the resolution plan and subject to the confidentiality that I spoke about. But within a couple of years, I think you will see us do something, more aggressive with the plant, and that will unfold as we have control of it and are able to bring our operating know-how to that facility.
Okay, what then is the India strategy? The last time we heard from ArcelorMittal on its India strategy was in 2009. Things didn't pan out, as we've discussed already, to your benefit. What now is the 2018 India strategy? How big a contributor to your global operations can India be in the next 2 to 3 years if you do bag this asset? And if you don't, what's plan B?
Yeah, so right now we're focused on plan A, which I'm here to talk about, and we're focused on executing and completing plan A, which would be the strategy for us in India at the moment. And how it unfolds into the future, we'll see. But for now, I think plan A is what we're focused on, and all of our effort is going into making sure that plan A succeeds.
But you aren't telling me much about plan A, Brian. I either keep running into confidentiality issues with regards to your resolution plan or legal issues with regards to your eligibility. So if I don't, is there anything more on plan A that you can share with us that gives us a better view of how you hope to be able to acquire this asset and how you hope to be able to build on it?
Yeah, so how we hope to acquire it is by making a competitive bid, first of all, and winning that round. And once that is done, I think from then on, our credentials are, bar none. We don't have an equal in the industry who could take over this asset and bring it to its potential like we could. So that fundamentally, in a nutshell, is our plan, right?
All right, fine. I'm going to give up on the Essar front. I'm going to ask you two safe, neutral questions about the metals business right now, world over. One is that we seem to be in a price upcycle, a recovery after many years of a slowdown across the world. And the second is, just as this upcycle seemed to be peaking or maturing, you've run into a tariff situation launched by US President Donald Trump. Your views on both of these?
Well, we don't know what the tariff situation is going to be because it hasn't been officially disclosed. So we will wait and see, and when it comes up, we will look at what the outcome is. He's
tweeted about it repeatedly, Brian. The president has tweeted. It's as much on record as it can be. We know that there will be tariffs on steel and aluminum. I buy into your point that there has been no official notification as yet, but we're already seeing, the European Union suggest countermeasures and counter tariffs on jeans and whiskey and all of that. So clearly, let's not pretend that this is not going to happen.
Well, our point of view is that if it does happen, we have to know the details before we can assess the impact. And the details are not yet known. There have been some broad statements made, but there are several details which still have to be disclosed officially. So whether it will happen or whether it will not happen, we can all be speculating about that. But what the details are matter. And for us, we think for the steel industry in total, The impact will be probably, in the United States at least, higher prices for sure, because that's what tariffs generally tend to do. And there'll be issues around the globe, as other governments have already communicated. They plan to take measures of their own. So we don't know what all these things are going to be. So all I can do is speculate along with the rest, and I'd rather avoid doing that.
But we do know what the proposed tariff is, and so based on that, can you give me a sense of really how detrimental this will be to the global steel industry, especially a global player like you? The bulk of your facilities are in the European Union, if I understand correctly, and then in Brazil and other parts of the world. So how does this change, what your market assessment is? How does this change how you're able to capitalize on the price cycle? How does this change the price cycle itself?
Well, I can't tell you really how it will change the price cycle, because the price cycle in the end is driven by supply, demand, and those are the fundamental characteristics of the business. In an oversupplied market, prices will be low, which they have been for the past few years until a year and a half ago. So what it will do to the price cycle, we don't know, and the details of how it will impact ArcelorMittal. Well, we are a producer in the United States. We have operations there. So, whatever happens to pricing in the U.S. will happen to our business as well. So, but we just can't say exactly what that is at this point in time.
How much of your production, global production, is located in the United States? What percentage?
Well, we produce probably, don't quote me on these figures, because I'm going to do some rough math in my head now, but probably 15%.
Okay, I can't not quote you on this. You are on an interview, so 15%. 15% of your global production.
I might be off on my calculations a bit, because
okay.
But it might be
ballpark 15%. All right, fine, I get that. Ballpark 15%. So you stand to gain to that extent of 15%, but you stand to lose, to the extent of 85% if you are a big exporter to the U.S. besides producing there. Are you?
Well, normally we're trying to produce where we sell in general. So without giving you any facts and figures to support the number of exports we might be doing to the U.S., I think generally what we're doing is producing where we sell. So in the States, we're producing, the vast majority of what we sell there. So
okay, let me reword my final question to you this way then. We were seeing a recovery in prices over the last year and a half, as you yourself have said. Will this tariff situation stem that recovery, stall that recovery? Will it sort of make the market conditions less conducive to growth, to expansion?
That's more of a demand-driven question. I mean, if the demand for steel rises because economies are growing, I suppose it's one way of looking at it. But I can't speculate on that at this point in time. I don't think we've done enough math on that kind of a thing to give you a clear answer.
All right, Brian, we're going to leave it there then. Thank you very much for joining us today and helping us with whatever details you couldn't share on Plan A. And let's see how that plan works out for you at ArcelorMittal, and how the Essar Steel acquisition pans out from here on. Thanks very much for your time.
Okay. Thank you. Bye-bye.
Bye-bye. That was ArcelorMittal's Brian Aranha talking about their bid for Essar Steel here in India. As you've heard, there were many details he could not share because of the confidentiality of the agreement. Also said that he wasn't expecting a protracted legal battle, but did spell out a little bit about how important this acquisition is to ArcelorMittal's India plans, given that their first investment in Uttam Galva went south. We're going to leave it there. Thank you very much for tuning in to this broadcast on Bloomberg Quint.